Hey folks, what is going on? It's Wilson and I'm back with another video. Yes, I know I've been away for a while. I've been getting messages like, do I still trade anymore? What type of trading do I do? I still trade. I focus more on swing trade because I'm running a business, I'm running a startup on the side, and so I dedicate a lot of my time when it comes to trading to just swing trading. But that doesn't mean that I don't day trade anymore. I still make my day trades when I spot a good opportunity, but mainly my main focus is more of the long-term investing side, passive income, as well as doing swing trades. So I get asked a lot recently from messages and comments that I've been seeing is what are some of the biggest mistakes that I see traders make, especially for 2020 when the market is on an uptrend, right? So we've been in a pretty bull market lately. Most of the days we've been up, S&P has been up, and everything has been up. So what are the biggest mistakes? What are the biggest holdbacks? Well, I'm here to kind of give you guys some advice, and hopefully this will help you guys out. So the first mistake, no matter if you're swing trading, you're day trading, is bag holding, right? Do not ever chase a stock. I've said this in my previous video so many times. When you're just holding it, like, I mean, how many times have we been in this situation, right? Where we see a stock, we think it's a good fit, or we see it going uptrend, then what do? We try to buy into it, and then it starts to go down. Then you're like, oh, maybe power lunch or whatever, stock will go back up. And it just keeps going lower and lower. Then you're like, okay, well, let's hold it for tomorrow, and then tomorrow there's gonna be another rally, right? And then the worst part is you go on like social media, you go on stock tweets, and you see all these people, they're going like, oh, it's bullish. So you hold on to it. And then the next day it drops by like another 20%, and you end up losing all the money that you put in. So don't ever back hold. It's go just make things go down. And that's one of the biggest mistakes, right? Don't get married to the stock is what I'm saying. Don't get emotionally attached to it. If the stock is not going in your favor, then get out. And that's why it's so important to set these limit orders, these stop loss, get out early, and move on to your next trade. And then the second biggest mistake is not setting your limit order and stop losses. I can give you a really good example of this, right? Where actually stop loss was in my favor. So I made a trade, a small swing trade, where I held overnight for TLRY, right? So TLRY is that cannabis stock. It received a massive uptrend. I got in as soon as I saw that the industry was hot, had good news, and that it was going upwards. So I got in, but I wanted to see if it was going to be a second day runner. So I held it overnight and I didn't sell at the end of the day. But I had to make sure that I was able to secure my profits. So what I did was I set a limit order, and the next day, as soon as I woke up, I saw that the limit order executed because the stock actually dropped down by like a whole dollar. But guess what? I was able to protect my profits, and that was in my favor, right? Because even if it dropped lower, I would have still been okay because I would still made profit. The stock didn't tank completely. But when stuff is going downwards, you want to get out early, especially if you're day trading. But this applies to investing, value investing, day trading, and swing trading. So make sure you always set your limit orders each time you get in the trade right away, right? Come up with something you're comfortable with losing and set that limit order right away. The next mistake that I see is people reacting to overhyped news. So Snapchat goes up by a dollar, goes up by 25%, and then everyone tries to jump on board. And then the price, I mean, the stock just gets oversold, overbought, and nobody knows what's happening. There's no news, there's nothing. Make sure you do your research and make sure that the news, the catalyst, is worthy news. So it's not some BS hype news like, oh, this company predicts that Snapchat will be the future. No, those are not catalyst worthy news. We want to see stuff that FDA was approved, like actual stuff, not like that they're attending a conference, but that their product was actually approved by FDA, especially for those people trading a lot of biotech stocks, right? Use reliable sites and focus less on social media. So avoid stuff like stock tweets and all these social media hypes like Twitter, where people are just bag holding or getting into it for the hype. Do your research. Use reliable sources like Benzinga is a very popular source that I like to use. I think it's pretty good. Make sure you just look at these stuff, or at least look at the company site. Do your research. Make sure you know the company. Now, the next mistake is doing too many things at once. I've been there, done it, right? I try to be a scraper. I try to be one of these long-term investors. Try to be a swing trader. Try to be one of these people that will just get in different industries. Focus on one thing you're comfortable with, that you've been working on and that is working for you. Then double down on it and improve on the same process over day. Some people are really good at trading tech stocks. They day trade tech stocks. Then focus on that sector. If you're good with biotech stocks, you know these conference calls, you know when the product is going to be approved, you know what the next stages are, and you're updated with the whole industry. Then focus on that. Maybe you're better at reading fundamentals, and you want to be more of a value investor for swing trades. Like a week, 2 week long swing trades where you learn to get into these more stable companies by reading the fundamentals. Then focus on that. Stop doing too many things yourself, right? And one of the things that I see a lot of people do is a mistake that people actually make is at the end of the day they don't really kind of like sum up what they did that day, right? So at the end of the trading day, when you call it a day, kind of review your day. What could have I done better, and how can I improve tomorrow? That's one thing that you should always ask yourself, and that's what I did in order to improve. Not looking into historic trades. History repeats itself when it comes to trading and the stock market. Pay attention to the historic technical indicators. Sometimes you can see when the stock goes up, how high has it been up and how low has it dropped. And this could be like a year back, but history repeats itself. So make sure you do that and look at the trends. So don't focus too much on technical jargons like, oh, VRAP, like this thing just passes that, or it passed EMA 50, whatever SMA. Just focus on just looking at the trends. Look at year back, 2 years back, 3 months back. Simple stuff. Just look at the basic charts and take consideration on how the stock moves. That's it for now. Thanks for watching. Subscribe and thumbs up, like the video, and I'll be back for more soon. Thank you for watching.